Hello folks, in this video I'm going to backtest another moving average strategy on the S&P 500. I'll refer back to this website which gives a couple of different methods for trading moving averages. So this first one here is the simple moving average cross, which I have tested on another video, but the second one here is what I want to focus on now. So this uses two different moving averages to create buy and sell signals, whereas this previous one only had one moving average. The dark blue line that you can see here is the slow average, and this will be taken over a longer period such as 200 days, so it doesn't react much to the daily price changes, hence why it's the slow average. The light blue line, which you can see, is much more reactive to the daily changes in price, and this is going to be taken over a shorter period, and this is classed as your fast moving average. Now the rules for this are simple. When the fast moving average crosses below the slow one, as it's done here, that is a sell signal, and when it crosses back above, that's a buy signal. So I'm just going to jump straight into the code and start backtesting this. Before I can actually test this strategy, I need to first of all download all the historical data for that particular index or fund or symbol that I want to test. I need to process the information, save it into a data frame, and so on. Now, I've already done all of that in a previous video, so all this code that you can see here, it's already been explained in detail separately, so I'm not going to go over it all in detail now. I'll just link that video in the description so you can watch it if you want to understand what's happening in each cell. But just to give a quick overview, loading in all my libraries, the main one here that I'm using is pandas to be able to store all this information, and then I define my start and end periods, load all the data in, I drop the unnecessary columns, so I just have essentially my open and close prices for the S&P 500, which is what I'm testing for the strategy, and then I plotted it out just to make sure that it all works fine, and then start calculating some metrics from it, such as the return and the drawdown and all that kind of stuff. So with all of that done, that's giving me the basis of the backtesting system. So I have my price chart loaded in, and I've extracted some data from it, and I have a benchmark set. So I know that without any kind of trading strategy, if I simply buy and hold the S&P 500, well, I've calculated the returns for that here. So I know that within that period that I've set, which was between 2005 and 2015, it generated an overall return of 83.68%, and annually that was 6.27. But then I also calculated the drawdown, which was just over 50%, which you can see visually here from this peak at near 1600 down to this low at below 800. So now with all this set up, I can start backtesting the system. Now before I do anything, I need to calculate my two moving averages because they're going to be the very fundamental basis of this entire system. Now if I go back up to the top where I've got the section for defining variables, when I set this up initially, it was for the simple cross system, which only used one moving average. But now because I have two of them, I need to define them individually here. So actually within this cell, I'm going to change this from period to, I'll call this one my slow moving average. So I'll say slow underscore MA equals 200. And then my fast MA, I will set to 50. So this is just how many days worth of data it's going to include within the average. And that shows how reactive it is to the price. Now just to make sure that this actually filters through, I'm going to rerun all of the cells. I only really need to run that one, but I don't want to miss anything out. So I'll rerun everything again, and now I can just pick up here and start calculating my moving averages. So I'll add a column here to say calculate, oops, get rid of the caps. Calculate moving averages. So to create new columns, I just call up my data frame, which is called price, and then I name the new column that I want. So the first one is fast underscore MA, and pandas makes it really easy to calculate this kind of stuff. So I call out my pandas data frame, and the averages are going to be based on the close price. So I say price.close, and then I say dot rolling, and then here I need to define my rolling window. So this is where the average time comes into it. So now the fast MA, remember I just created a variable for that. So the window here was 50, which is saved in the variable fast MA. And of course I need the average of these values. So I'll say .mean. So this is just going to take the last 50 close prices, and then it's going to take a mean or the average of them. And it's going to create a new column for me, or a new series within my data frame that contains all of that information. Now I can just create a second one. So I'll copy that down, but I'll change this to slow MA. And I need to rename that variable also to slow MA. So with that done, I just want to make sure that it's calculated and worked in the way I expect. So I will just print out the very end of this data frame by saying price.tail. So if I run that, you can see now I've added 2 extra columns. So all of these ones had been worked out previously. So these are my open and close prices that I downloaded from Yahoo Finance, the daily return, the benchmark balance of simply investing in the S&P 500 and holding, the peak balance and the drawdown, and then this is where I start creating the moving averages for the system. So I can see that they're being calculated, but it's actually quite hard to visualize whether or not that's looking correct at all. So what would be better to do now is to plot them out. And I can do that using pyplot, which has been loaded in already. So we'll say draw graph. And here I'm going to first of all plot my price. So say plt.plot price.close. So I want to plot all of the close prices. In fact, let's just do this one at a time. So I'll run that. And you can see that's showing me my price chart of just the S&P 500 on its own. Now let's overlay one of the moving averages. So I'll say price.fast_MA, which has just been created in the previous cell. So if I run this now, you can see I've got this orange line going over it. Now, because this is the fast moving average, it responds very quickly to the price, just like I was showing in this diagram here. It responds a lot quicker. Of course, they may have used a different number here, so it's not exactly the same as mine. But in my case, it follows the price quite accurately. Now, the slow moving average is going to be a lot less reactive. So in here, I can say price.slow_MA. And if I run that, you can now see the green line is showing me my slow moving average. And you can definitely see the difference between the two. The green one is less reactive to it, and you can see where there would be these potential signals. So for example, here, the orange line crosses over the green line. So that's where you would exit the market. You would enter it back in when the green line crossed, the orange line crossed back over here. So this would generate your buy signal. So this is all looking good now. I know that I've got my moving averages set up, and I can start actually generating some of these buy and sell signals. Now the signals themselves are essentially based on a true or false condition. I'm either in the market or I'm not. And the condition for that is going to be when the orange line is above the green line. So my fast moving average is above the slow moving average, and because that indicates that it's crossed over and is still above it, it is not crossed back below it yet. Now to do that, I can create yet another column. I'll say define entries, and I'll create this new column which I will call long. So long is just going to contain a number of true or false values for whether or not I'm currently long within this market. And the check for that is just going to be whether or not the fast moving average is greater than the slow moving average. So again, let's just print out price.tail, and this is only going to give the last 5, so it might not really give much of an indication, but we know that this is correct because pretty much since say 2013, the orange line has been consistently above the green line. So you would expect that it's true for that entire time. So with these long entries defined, I can now start calculating the return of the system. And the way I'm going to be doing this essentially is by saying that whenever this long condition is true, that means that I'm essentially just following the ups and downs of the S&P 500 because I have invested fully into it. So the return on those days is going to be just the same as the return of the S&P 500 for that day. But what if I'm not in the market? Well, on those days, you're neither losing nor winning, so your return is just flat. It's 1. So to do that, I can use NumPy. So I'll create another column here, and I'll say calculate system balance. And this one is going to be called sys_bal. So this kind of mimics what I've already got above, which is the benchmark balance that I've calculated here. So the benchmark balance is just following the balance if you'd invested in the S&P and held it. The system one is only going to invest when we have long signals. So that means that I need to check when this condition is true. And to do that, I call numpy and I say np.where. So first of all, I need to put in the condition that I'm looking for. So the condition is whenever we have a long value equal to true. However, there's one thing to consider here. This signal is only going to be generated at the end of each day. So on this particular day, for example, the 24th of December, the market opens, then closes, and at that close is when your moving averages are updated. Remember, these are calculated based on the close price. So once these have been calculated, if they've crossed, then you're going to be generating a true signal. However, you can't then enter the market at that point because the market has just closed. So you actually buy on the next day's open. So that means that I need to be looking for the day before. I need to be looking for a true condition that has happened yesterday to allow me to enter the market today. So I need to offset this by 1, and I do that by just saying .shift and putting 1 in here. So whatever number I put in here is how far I offset up the way. So by shifting it by 1, I can look for yesterday's signal. So if I got a trade signal yesterday, then today's return is going to be just the same as the S&P's return, which is price.return. I've calculated that already. However, if the value is not true, then we are not in the market, then the return is just 1. So let's just see that this is calculating correctly. Price.tail, and I'll put out 10 values this time. So you can see, because all of these values are true, it is generating a return here. So although we can't see the column before it, it must also have been true because it's then triggering that I am getting a return which is equal to the daily return. So for all of these values, it's taking the same return that you would expect from the S&P 500. So let's just tidy that up so we only get 5 now. Okay, so that's fine. I've got the return calculated, and from that I can simply move on and calculate the system balance. So I will start with the exact same value or exact same investment as I do for the benchmark, so I can easily compare the two. So let's say here, calculate system balance, and this is going to be another column or another series called sys_bal, system balance. And to calculate this, I start with my starting balance, which I've defined right at the beginning of all this code within my variables. So here's the starting balance. I've just picked 10,000 arbitrary because it's a nice round number, easy to work with. Starting balance, and then of course I multiply that by the system return. Oh, I've named this incorrectly to start with. Let's change that. And now this could make a bit of a mess because I already have a system. Yeah, so I've rerun everything, and that's just, otherwise I would have ended up with 2 columns. That was my bad, talking and typing at the same time. So that was the system return I was calculating, and I think I referred to it as such, but I just named it system balance. So my actual system balance is going to be the starting balance multiplied by price dot system return, so sys_ret, which I've named correctly now, but not just the individual value, because that's just going to take this value of 10,000 multiplied by that number there and then just give me that same return. In fact, I'll demonstrate that. Say price.tail. So my system balance, you see all it's done is created another series, but in here it's just taken that number of 10,000, multiplied it by the return for that day and said, okay, that's your return, that's your balance today. But on the next day, it's just done the same thing. It's taken that 10,000, multiplied it by this. It's not taken into account the previous day's balance. So I actually needed to cumulatively multiply all of these returns and add them all up over time so that I can see how much the balance is increasing and decreasing throughout the entire period. And to do that, I just add on, I turn this into a cumulative product. So cum_prod, run this again, and this time you can see it's calculated correctly. So it's actually taking into account yesterday's return and the return before that to give me a total return and a total balance. So here we can see quite quickly that the system balance does finish higher than the benchmark balance. At a glance, that's not quite enough to really draw any conclusions, so I need to extract a little bit more data from this to be able to get a better comparison. But for a quick visual indication, I can simply plot both of the prices, both of the balances over each other. So this will just be a quick chart here. I can say plt.plot price.bench_bal. So this is my benchmark balance. Oops, I should have Jupyter Notebooks corrected my error there, but I should have said plt.show. There we go. So that is the just the balance from the S&P 500. So it pretty much follows exactly the price chart, which is what you would expect it to do. It's long 100% of the time. So now let's add in plt.plot price.system_return. System balance, I keep mixing these two up. Run that again, and that's the orange line here showing the return from the balance from the system. And you can see actually, because of the crossovers that happened at these large downturns, it has kept you out of the market during these times. So at that point, this is where the return is equal to 1. So it just stays flat. It's not going up or down, but it does avoid quite a significant amount of the losses. And as a result, it does end up higher up ahead. So you can kind of see that it does seem to outperform very slightly, but I'd like to extract a few more metrics from it just to get a better comparison. So I'll add a comment here to say calculate metrics. And the first one is going to be the system return. So sys return. This is going to be one variable. This is the overall system return from start to finish within the state range of 2005 to 2015. So that is going to be done by dividing where the price finishes, price.system sys_val. So you access these in pretty much the same way as you do with list. So by saying -1, it's going to the last value. So it's going to take this value here. Then I divide that by my start value, price.sys_val0. And that's going to generate the overall return. But of course, I want this as a percentage. So I will need to take away 1, wrap this in a bracket again, multiply it by 100 to give me a percentage. And then lastly, I just want to round all of this off because otherwise it's going to give me a very long float number. So let's round that to 2 decimal places and print out system return. And what have we done here? Sysbalance, sysbal. Oh yeah, I keep repeating the same word, so I typed it automatically. I meant to say print. Print system return, and that's showing that over those 10 years, it's generated 104% overall return. So that's quite significant, but I'd like to also compare what that is annually. So I will calculate the system_CAGR. And in fact, I've already calculated this for the benchmark. So rather than typing it all out, I'm just going to copy it down and just rename it. So it's calculated up here. This is the compounded annual growth rate. And essentially, rather than showing you the overall, it shows how much it gains every year. So let's just rename this to sys, change that to sys as well, and this one. So it takes into account the number of total years that this is tested over to annualize it for me. And then I just need to print out sys CAGR on that, and now you can see that it generates 7.41 annually. Now compare that with the benchmark, which was 6.27. It does seem to outperform slightly and generate a higher return. But of course, I'm only looking at the return, I'm only looking at the upside. What I also want to look at is the downside and what the maximum drawdown is. I know that the drawdown for the benchmark was over 50%, and it was during this period here, so it's a fairly significant drawdown. But I can see that this seems to skip out some of those lows. It does have its own drawdowns, but perhaps it's not as severe. So let's calculate that and see what that actually gives me. Now again, rather than typing everything out, I will just copy down what I've done for the benchmark, which is here. And then I just need to rename it all from benchmark to system. So I'll change that to system peak and system balance. So what this line is going to be doing here is essentially to calculate the drawdown, I need to look at where each of my peaks in price is and then how far it drops from that peak. So that means that I need to actually track that peak to start with. So that's what this column here is doing. I'm adding a new column to my data frame, and it's looking for the cumulative maximum value within my system balance. And from that, I'm creating a drawdown value by taking away my daily balance from the peak balance. So as the price drops away from that peak, the drawdown is going to increase. And that's what this value is being calculated here. So finally, that's going to give me 2 individual columns, but I want to be able to find out what the maximum of all those values is. In fact, I can show what this looks like at the moment. Let's comment all this out and just say price.tail. So you can see here I have my system peak and system drawdown. So as the system balance reaches new highs, for example, the system peak moves up with it, and it continues to do so here, and you can see there's no drawdown because it's creating new highs. But then it drops away from that peak. The peak stays exactly the same because that's not changed, but now I have a drawdown, which is my current price or my current balance minus the peak balance. So now what I want to do is turn this into a percentage. So I can simply divide the drawdown by the peak and then find the worst drawdown. So let's get rid of all this, get rid of the comments, and the drawdown here is going to be my system drawdown. It's going to be rounded in the same way, so it's all pre-typed, but it's rounded to two decimal places, and the calculation is the system drawdown divided by system peak. And then from that, because these are negative numbers, to find the maximum, I'm actually looking for the minimum because it's negative, so it's going to be the smallest one of those. So lastly, let's just print out the system drawdown. And you can see the drawdown is 19.86%. So again, significantly less than just buying and holding, which was about 52%. Now I've put all of these metrics just kind of arbitrarily calculated as I've gone along. It would be nice to be able to compare them all in one place. So let's just add a new cell here. And rather than typing all this out, I'm going to copy this over from my snippets here. And I should be able to run it straight away. So I've got my benchmark return. Yep, so I've calculated all these in the cells above. So this is really just outputting everything in one place for me. So now I can see the benchmark returns metrics and the system metrics. So you can see that this trading system does generate an overall higher return. Not significantly higher, but slightly higher annually as well. But the key point here is that it does seem to avoid some of the more significant downturns. So while the benchmark went through that very, very large drawdown, the moving average crossover system wasn't quite as severe. So I'm not sure exactly where that 20% happened, but along the line somewhere, maybe one of these from here to here somewhere, you had a 20% loss, but it's not really as significant as this massive 50% loss. Now there are other metrics that I can look into and calculate for this. So for example, it would be worthwhile working out some kind of risk adjusted return, simply because a system that can generate more return or even the same amount of return but risks less or has the potential for smaller drawdown, well, potentially that's a better system to trade. But I'm not going to go into all that just now. I just wanted to see how this actually compares against a simple buy and hold. And it does look like it is a slightly better system, and it does seem to produce excess returns compared to that. However, there are some important assumptions and considerations that have to be made, such as this has not accounted for any trading fees. So anytime there's a trade, there should be transaction costs associated, which have not been worked into this model. Additionally, it assumes that you can buy and sell at the open and the close, which in reality is not going to be the case. So there are all these kind of assumptions that would have to be worked into if you were to refine this model further and to really get into studying this crossover system. And of course, the other thing is that I picked these two periods for the moving averages arbitrarily. So the slow and the fast being 50 and 200. I just picked those because those seem to be common numbers when you look up these kind of crossover trading strategies. But of course, you could test it with all sorts of different settings, and you can compare them and see what you will get. Perhaps there's ones that give you better returns, but then you do get into a situation where you're potentially overfitting to your data, optimizing things, and curve fitting a bit too much. So I think that's going to do it for this video. I hope you found this useful, and thanks for watching.